Should members of Congress get paid while the government is shut down? Our representatives, our senators, they're getting paid right now. Should they be paid when the government is shut down? Put in the comments below. What do you think? All right? Because I know what I think. I think negator all the way. Do your freaking job. Get a budget passed, and let's get back to business. Hey, I'm wearing my Niners shirt today because guess what? Niners won yesterday. They were huge underdogs. They still came through. Big victory. I was watching on the airplane. I was coming home with my wife from our trip to Italy. And today, in addition to being happy about the 49ers win, it is actually my 33rd, mine and my wife's 33rd wedding anniversary. 33 years we've been married. You know what? They ain't all happy, ain't all good times, but you know what? Overall, we stick it out, and hey, that's what love is. Love, don't give up. That's what we are. You know what I'm not giving up on either? The housing market update. That's right. Let's get into it right now. Overall, prices are steady, inventory steady, and rates are down. Not a lot, but just a little bit. And then the headline news, a lot of headline news, obviously led by the government shutdown on October 1st. We'll talk about the impact on rates there. Home price appreciation is stable. Employment market, well, it's weak. We only received one of the two really big reports this week. Super weak. We'll get into that. Pending home sales show a slight rebound, and VA rates are down just a bit. All right, so we have the government shutdown on October 1st. What does that mean? Well, a lot of people are not working. They're being furloughed. The length of the time of this government shutdown, and the last one we had was 13 days, the length of time is going to determine the overall impact to mortgage rates and to the housing market. Congressional Budget Office estimates that there will be 750,000 furloughed employees. And private government contracts, people who work for a private company but they have contracts with the government, they may not get paid. And some other things that will affect or impact us down the road: no BLS jobs report, no initial jobless claims. We saw that this week. Neither of those reports came out. And really what that meant for us was we didn't truly see how weak the labor market was. All right, BEA census reports will be impacted, and next week we probably will not see the inflation reports, the first two inflation reports of the month, the CPI and the PPI, Consumer Price Index and the Producer Price Index. The impact on the economy in 2013, when we had our last government shutdown, which again was 16 days, the CBO estimated that our GDP, our gross domestic product, dropped by 0.6%, and there were 120,000 private sector jobs lost. I remember that. The last time we had that shutdown, I was in a position where I was hiring a ton of government employees. I probably had like 35 government employee positions that we were trying to fill. We had hired some, they all got basically furloughed, and we were unable to complete the hire. Well, guess what? Not only did we not complete the hire, they never got the job. Guess what happened to those 35 jobs? We lost nearly all of them. Why? Because we had to adjust. The government had to decide who was getting paid, what positions were going away, and I lost a lot of positions at that command I was at. So really a big impact that this government shutdown could have if it is prolonged. So what is the impact on the mortgage industry? Well, VA, FHA, and USDA loans could be delayed because we are minimal. Some people are being furloughed within the VA. A typical loan shouldn't see any problems necessarily, but a loan that has to go to the VA for approval. I have one right now that may be impacted by that because I have a buyer, his girlfriend, the VA must approve a purchase if the VA buyer and a non-VA, non-spouse buyer are on the loan. So that loan has to get approved by the VA. Well, that may be delayed a little bit. The other thing, mortgages that require FEMA flood insurance could be impacted. That's about 1,400 across the U.S. a day where we need the FEMA flood insurance numbers or input on the loan. So really big impact from the government shutdown, and that impact will be seen more the longer this shutdown goes forward. All right, so let's take a look at the Shiller Home Price Index. This is the gold standard for home price appreciation across the country. And we see home prices slipping from June to July on a seasonally adjusted average, down 0.1%. So not a lot. And year over year, we're still up 1.7%. Look at that, 1.7%. back in April, we were at plus 2.8%. So while we are seeing appreciation, that level of appreciation is coming down. And the longer we stay in this higher rate environment, and we are in a higher rate environment, although we're down a little bit, we're going to continue to see, I think, this appreciation come down. And this, again, was also in July. So take this into consideration as well. This report is for July. That was before interest rates started to go down, August, September timeframe. So we could expect possibly to see home prices push up in the upcoming month's reports. Pending home sales report. Signed contracts on existing home sales rebounded. They rise 4% in August. This was after dropping 0.4% the previous month. Yearly, we're up 3.8% pending home sales. Pace of home sales is at 4 million. That's not bad, but it's a slight improvement, but it's still well below the 5 to 5.5 million the index is shooting for. And why did home sales or pending home sales rebound in August? Well, that's because interest rates started to go down. And because interest rates go down, you see more homes going to market. The pending home sales, these are the home sales that will go into the existing home sales report the following 1 to 2 months. And we see the index level. You can take a look at the index level is the highest it's been in 6 months. All right, we have the one jobs report this week that really took on a bigger meaning because we didn't get on Friday, we didn't get the BLS jobs report. The private sector, the ADP employment report, huge miss. 32,000 jobs lost versus the 50,000 gain that was expected. Job losses are down in 3 of the last 4 months. Do we see a trend developing here? Pay for job stayers is actually up, which we don't typically see. People don't want to lose their good employees. You see job changers actually showed a slight decrease from 7.1% down to 6.6%. You know what? People are not hiring right now. They are not hiring, but they do want to keep the valuable employees that they have. This report's so important this week because no BLS jobs report and no jobless claims reports due to the government shutdown. What does this mean for future rate cuts? Well, the odds of a 25 basis point rate cut in October are now at 100%, and December is at the great 92%. So overall, a very good ADP employment report. Not good from a job standpoint, but good from an interest rate standpoint. Let's take a look at VA rates. VA rates are steady to down a little bit this week. Could have been much lower if we would have received that BLS jobs report, but we are slightly down at 6.04, 6.05%. Government shutdown will impact inflation reports over the next couple weeks. I do not expect to see interest rates drop below 6% for purchases on the VA side unless we get some good economic news in the standpoint. I just don't see rates moving that much while we're in a government shutdown environment. And that's kind of what we've seen really going through past government shutdowns. The impact on interest rates, they've stayed steady to down a little bit, but no major movements up or down. So what does this all mean for you? Well, mortgage apps, they were down last week, 1% for purchases, still up 18% year over year. Refis down 21% though up 16% year over year. So still pretty good for refinances. We're still at 10-year highs for inventory in Oahu. Our mortgages still, they fluctuate a lot, but still I'm doing a lot of ARMs. Something for buyers to think about. Consumer confidence report was very weak. This is a report that comes out every month. But plans to purchase a home rose to 4-month highs. And that's largely, I think, because we saw interest rates coming down. Sellers, hey, you gotta do seller credits. If you are interested in learning the power of seller credits, you need to pay attention to my next video. I'm gonna talk about seller credits and what seller credits are doing to help sellers sell homes and buyers buy homes and have affordable mortgage payments. So stay tuned for that. All right, have a great day. Aloha.